What's up, YouTube? Another crazy week here for the portfolio. Google's raising $85 billion from their equity plays to raise money for AI infrastructure. We are also going to cover Bill Ackman's interview, how he's bullish on Amazon, Meta, and Microsoft, which are all big names here for us. And then we'll also talk about why I think Google is actually in the forefront of AI and why I think raising $85 billion is a good move for them. So let's get started. So portfolio is down overall here, mainly because of Google and Microsoft. They both had a slight pullback from their moves a couple of days ago. Like I mentioned, Google investors are kind of frightened on their big raise that they did. And Meta actually had bullish news. They created this agentic AI platform for enterprises. And I think we might be seeing a little bit of a rotation here from money going from those hardware stocks and chip manufacturers like we've been seeing in the past couple of months, back to some of the software stocks like Meta and Microsoft, for example, or maybe even Amazon, some of those different players within these industries that are also benefiting from AI. We actually had bullish news on Meta. Like I mentioned, the stock's trading up 4%, which is awesome because Meta has done nothing this year. So maybe we see a little bit of a recovery here from them. In talking about Google, they're actually raising a ton of money and diluting shareholders, which is why the stock's trading down so much this week. I'm still bullish on the company. Like I've mentioned, $85 billion raise is the largest raise ever from the equities market. So they're not borrowing cash. They're just diluting the shareholder and raising money from shares. The stock traded down this week. And as you can see, we're down 3%, which is not a massive amount. But if you look at the month, we've had some consolidation here on the 370 and 380 range, which is good, I think, overall, because we've had a gnarly run up. And this makes up my largest position with a little under 50K. So diving a little bit deeper into Alphabet's raise, they're raising $80 billion from the equity market, like I mentioned, and this is the biggest raise they've done. And they've already invested $60 billion into the AI infrastructure play. And this space has projections to reach $3 trillion by the decade end. So by 2030, these companies like Amazon, Meta, Google, they're going to invest a combined $3 trillion, which is crazy, into AI infrastructure. So like I mentioned, they sold stock to raise money in the public equity market. And that's why the stocks traded down so much. And people like me and you got diluted. That's why the stock sold out so much. But the thing is, they need this money. Like Sundar Pichai has talked multiple times how they don't want to be behind in terms of compute. All these companies are spending so much money because they see the monetization plays with AI, and this is the biggest driver for them. So I think the market is starting to realize that these companies are spending $3 trillion closer to 2030, and this is not going to stop anytime soon. If you watch the interview that OpenAI's CFO, that lady was talking about how by 2030, we're going to have so much compute and being able to monetize on it, but this is not going to stop then. By 2032, 2033, all this compute that they're building today is going to be usable. So this stuff is here to stay. And I think the market is starting to understand that and moving away a little bit from the hardware stocks, but only time will tell. Just thought I would share this with you guys because these are interesting news here for Google. And we've had a lot of action this week when it comes to Meta, Microsoft, and Google. And this is a big catalyst here for Google. And being my largest position, this affected my portfolio a good bit. There's a short clip here from Bill Ackman from this week, this interview on June 3rd, and he's stating exactly what I've been saying, that momentum and money is now moving towards hardware stocks, and companies like Meta, Microsoft, Google, they're all being undervalued and trading at the lowest multiples they've seen. So let's get into it.
Are you an investor in the AI complex? And how do you underwrite business model quality from what you see on the outside in the entire complex?
I mean, yes, effectively, we're an investor. Today we own Microsoft, we own Meta, we own Amazon. I think you're either directly or indirectly you're invested in AI, or it's a threat. So you have to understand it.
Ability is less.
What's interesting about markets is people always bring their eye to the new thing, and the new thing is sort of chips and semiconductors and energy, and that's where the shorter term capital is going. What tends to happen is really high quality things get left behind. I think a similar thing is happening today, in a sense, to Amazon, Meta, Microsoft.
Those are the ones.
These are old-fashioned companies in kind of this, the OpenAI.
So they're undervalued in your mind.
Yes.
So you guys heard it from the man. Bill's talking about how money's flowing to hardware stocks and that the market's always looking at the shiny new thing. I've been talking about this for weeks, and that's why I've been so heavy into Meta, Amazon, Google, and Microsoft. I have over $188,000 worth of exposure into these four companies. And because I'm so incredibly bullish on them, because you're going to be able to monetize on this compute and AI better than any other companies in the world. And the market's very short-sighted at times. The money flocks into Micron, SanDisk, and those are a great place to do. I'm not saying if you're an investor of these companies, you're doing it wrong. I just think that Meta, Microsoft, Amazon, and Google, they get left behind, especially Meta and Microsoft. They trade at lower multiples that I've ever seen, and they're quality companies that are growing more than 30% year over year. They're great businesses. So I'm incredibly bullish on them. And like I mentioned, I have over $180,000 worth of exposure to these names. And I think the next couple of years are going to be great for us here. And it's cool to see Bill talking about the same things I've been harping on the last couple of weeks. I think he's stealing my ideas. But great minds think alike. No, I'm just kidding. But here's the week view. Like I mentioned, we're down 5%, and we remain bullish on these names. Bitcoin and Ethereum are actually looking attractive at these prices, and I'll do a standalone video on crypto sometime this week. So if you haven't subscribed, make sure you do that right now. We're building this account to $1 million. I appreciate you being here. Let me know in the comments what you think of the video, and I'll talk to you guys soon.